Be sure y'all comment below resilient. So you can be resilient throughout the day, man. Today we are something new going on with this stream. Uh all right. Well, we'll go ahead and get the stream going. We're live. I'm not sure why this. Welcome to this live chat. Remember to guard your privacy and abide by our community guidelines. Of course. Now, can you get this off my screen? I got this crazy thing on my screen that's not coming off. Oh well. Let's see. Oh, yes. Well, let's see. Q&A. Right. So do you have a budgeting system is key, right? And if you don't budget, right, you're not going to be successful in trading, you're not going to be successful in life. You have to learn how to budget your money, meaning you got to know what you're making, right? You got to know what the ins, and you got to know the outs. You got to know your bills, which is the outs, debits and credits. You have to almost get back to remembering what you learned in your accounting class, right? Everybody took accounting, everybody took different sources of math, right? So if you go back to your accounting class, debits and credits is what you want to look for when it comes to your balance sheet, right? And just how you create your own balance sheet, create your own ledger to actually purchase properties, right? And in order to purchase these properties, you got to have your budgeting properly. You got to create a income statement, right? Create a balance sheet, right? Because all the real estate agents and all the people that you're buying assets from want to see is, are you able to pay that back, right? Are you able to pay the money that you're going to be um borrowing back, right? Do you make enough money to actually borrow the money that they're going to give you, whether it be a private lender, whether it be a public lender, whether they just want to make sure that they're going to be able to recruit their funds, right? Plus the interest that they're going to charge, because loans come with interest, right? But in order to do that, you have to be good at balancing, good at budgeting. So you have to have a good budgeting system, right? So we're gonna go take it back to the old school way of budgeting. We're gonna take it back to the old school way of creating a balance sheet, right? The T form, right? The T form is something you also learn in accounting, right? The T form is a T in the middle of your paper, right? Or at the top of your paper. And on the left, you're going to have debits, and on the right, you're going to have credits, right? And you're going to go through next month, last month, go to last month and see, check your bank account and see actually what you made that week, that month, right? That means if you're getting paid every 2 weeks, what are you making every 2 weeks with your paycheck, right? And then add on any other sources of income that you made, right? And you may have gotten this stuff in cash, right? That's why it's good to keep a balance or a ledger on what you actually bring in and what you actually pay out, right? Because the main thing is budgeting your, because some people don't even know that they've made this amount of money within a month, right? Because they may have sold something and made $100, right? But they didn't put that $100 on their ledger. So you're actually making more if you're actually doing yourself a disservice if you don't write your ins and outs down, right? So the thing that we're gonna do this is called a T form, right? So the T form has the debits on the left, credits on the right, right? Or vice versa, right? Credits on the left, debits on the right, right? So you want to go through and see, what's your 2 week paycheck. So you pretty much got paid 2 times last month if you don't have any extra sources of income, right? But this is why it's key that you actually add extra sources of income, whether that be trading, right? Whether that be just a hobby that making things and reselling it, right? Buying and reselling, right? This is why it is key that you actually have multiple sources of income, right? Because those multiple sources of income can, make or break you when it comes to the income that you need to actually buy different properties and buy different assets, right? So that's why it's key that you log everything, right? Nobody said that you had to, report it, right? There's a difference between logging and reporting, right? You're going to log how much money you make, right? But you're going to report what you want to report, right? I can't tell you how to report. I'm not your tax professional. I'm not a tax professional, right? I'm not a tax professional, but these are the different languages that that I speak when it comes to the financials, right? So what you want to do, all right, so say you make $1,500 every 2 weeks. So that's minimum $3,000 every month, right? So on the left side, you're on under credit, you're gonna put $3,000, right? And on the right side with debits, now you want to go through and you want to add all the things that you pay out, right? That's gonna be your credit cards, that's gonna be your car loan, that's gonna be your rent. What does all this add up, right? What does it cost to be you? Is what this live is going to show you. What does it cost to be you, right? And I might need to put that as the actual title is, what does it cost to be you, right? So you make it $3,000 every month, right, with no extra source of income. So this may show you that you may need extra sources of income or add extra sources of income, and you're able to actually do that just by subscribing to my channel and looking to see what I have on my page to help you with your extra sources of income, right? So that being said, so you're gonna write down your debits, write down your credits. You're gonna subtract your debits from your credits, right? And then you're gonna actually subtract that and see what you come up with, right? What do you have left after you pay your bills, right? After you finish, all your debits are calculated, right? All your debits are calculated, all your credits are calculated. You subtract, and then that's what you have left over, right? That's what you have to reinvest back into something. That's what you have. What people call it play money, right? But I'm not gonna call it play money. I'm gonna call it reinvestment money, right? Because we want to make sure that you're taking that money and you're reinvesting it back into something that's going to make you money, right? Because what we wind up doing is you end up doing this exercise, right? And you end up spending the extra money that you have left over because you see that there's some left over, but have a plan for that, let that those funds that are going to be left over, because those funds could be the reinvestment that you need to actually add another source of income to your repertoire, right? Add some more source of income to your. The main thing is to take the money that you have left over and throw it into something that's going to create you more money, right? That's going to get you to your next level when it comes to your income, right? So make sure that you subscribe to this channel. Make sure you comment below, and make sure that you email us at J Glover at investment trade junkies investment group.org. Peace.